Welcome everybody to a new analysis of Tridomics. This is the 20th episode and we're going to focus on the Dow Jones index. So with this episode, we're going to conclude the first run of all the major index in the US because in the past we have analyzed the Nasdaq, the Russell 2000, Standard & Poor's 500, and with this last video we're going to conclude the first run. So in the next videos we're going to give an update regarding the situation, and probably I will make one video just for all of them. So stay tuned, and if you haven't done it yet, subscribe to our channel in order to get the latest video analysis that we're going to issue on a regular basis. Using our T-cycle analysis, that is a methodology based on cycles, and each of the cycle, as you can see on the right-hand side, has a specific duration and gives the greatest advantage over the technical analysis to be able at any point in time to calculate statistically how long the price can keep falling or rising. Let's see what has happened to the Dow Jones index back in 2022. And let's give an update regarding what the future price move can be. So first of all, let's analyze the downward cycles. So from this low, occurred on the um, 13th of October 2022. We have had a downward yearly cycle that has been divided in the first a 6 months cycle and the second 6 month cycle. The first 6 month cycle has been positive, and the second T+4 6 month cycle has been negative. It's negative because the low in which it ended was lower compared to the low from which it started, and as a contrary, the first one has been positive because the low from which it started was lower compared to the low in which it ended. If we gauge the time, we have that the first 6 month cycle has had a duration of 154 days, and the second 6 month cycle, the negative one, has had a total duration of 107 days. So those duration were perfectly in line with the total duration, the minimum and maximum duration, 94 to 168 days for a 6 month cycle. From the low occurred on the 27th of October 2023, we have experienced a new T plus 5. This new T plus 5 has generated the first T plus 4, and now we have had potentially the closing of another cycle that had a total duration of 30 days. Therefore, here we expect a T plus 2, because after the closing of a T plus 2, we can have a new rising T plus 2. So this is the situation regarding the downward cycle. Let's now have a look at the upward cycle, where is the most important, let's say, part of the video analysis. So from the top occurred on the 5th of January 2022. We have had the first yearly upward cycle. The upward cycle are connecting tops with other tops, and in this case was negative because the top in which it ended was lower compared to the top from which it started, of a total duration of 226 days. And this yearly upward cycle has been divided in the first 3 month cycle, the second T plus 3 month cycle, and the third T plus 3 month cycle. Subsequently, we have had the second yearly upward cycle that has had a first T plus 4 with a total duration of 163 days. And then we have had another T plus 4, And the total duration of this t plus 4 has been of 167 days out of 168 days. Now, the key question is what has happened from March to May of this year. Because if we want to gauge the total duration of a t plus 5, we're going to find out that we have had with the top occurred on end of March, 331 days. But if we further stretch the cycle, here we're going to end up in May with 367 days, which is over the total duration of a maximum total duration of a t plus 5, 338 days. So what has happened here? I would suggest you also to go to the introduction to the T-cycle analysis, so to better understand what I'm talking about, because here is getting a bit technical. So first of all, this is a cycle that can be a Bayer tongue. So a Bayer tongue is an extension of a duration of a cycle of 3 degrees less that can be embedded between two wider cycles. So in this case, after the first t plus 5, which is not just a t plus 5 or a t plus 7, but so a multi-yearly cycle. But let's say this is a t plus 5 in order to have it easier. The first one and the second one, then between t plus 5 and a new t plus 5, there might be a Bayer tongues of a t plus 2. But it can also be that rather than a t plus 5, so after a first yearly upward cycle and a second upward cycle, we might have a t plus 4, so not even a t plus 5, that can further extend the rally. And this is a situation that is similar to what the Nasdaq and also the Standard & Poor's are showing. So we cannot say from here that we have a Bayer tongue, certainly, but neither a T plus 4. And why that? Because we have to wait. We have to wait that the market is going to give us additional information for the future direction. And what I mean by that is the following. So if here we have a t plus 4, here we have close a t plus 2, then another t plus 2 is on the edge. We have to closely monitor the strength of this push back to the upside. And by strongly monitor this strength, I mean that if we're gonna go back to the top of the absolute top, then this will not be a Bayer tongue anymore. So it will be another cycle that might be a T plus 3 or T plus 4 even, because we have a total duration of a T plus 2 under the top. So therefore we can extend the rally. If we go back and we're gonna take over this top at 39,787, no, $40,077. But if we don't go back to the top and we go over, then here we are expecting a T plus 2. Therefore, we need at least the next week to be over the minimum from which it started. So we need the next week we need the price to stay higher, the $38,000 for at least the entire next week, because here we have to generate a T plus 2. But if after the week we will start losing strength and we're going to violate this, or we're going to break up this low and subsequently this low, then we're going to give the extension, or we're going to have the extension of the total duration of the remaining time of the cycle towards the downside. This is something that we cannot predict at the moment. Therefore, the two checkpoints to keep closely monitor for next week are this swing for the lower part and this swing for the upper part, because we need to better understand what the market what the market will do. And this is, of course, not just a matter of news, but it's a matter of time. It's a matter of algos. Because if we're going to go back to the low here before 94 days, then the extension of the duration of the cycle will be to the downside. And you will know it if we break this low. If we break this low, then this is a T plus 2, or we are expecting a T plus 2, then we will have less time to go to the downside. But still, we have to wait what the market is going to do, because here we might have the possibility to have a new T plus 5. And if there is the possibility to have a new T plus 5, like in this case, we cannot go back to the top, at least for 2 degrees less of a duration, so at least for a T plus 3. So we need a total duration of T plus 3, so a total duration of 48 days before going back to the top. And 48 days means that we have to stay lower to $40,000 until, at least as the best case scenario, the 30th of July 2024. Otherwise, we don't have enough time to develop a T plus 5. And these are all data and explanation you can find directly in our video introduction to T-cycle analysis. So there are two critical swings. We have to wait what is going to happen next week. The idea in any case is for the next week to stay higher the low that occurred on the Wednesday 29th of May. So here statistically the direction is to the upside, but we need to carefully monitor the strength in which new hikes will be developed next week. We can also have a look at the upward cycle. Here we have already 8 days. So by the beginning of next week, we might see further push to the upside, because we have to close also the first weekly upward cycle. But then after the weekly upward cycle, that can last until 11 days. So here we can have a push to the upside until 11 days, so until Tuesday, 4th of June. Then from, let's say, mid of next week, then we have to be really careful in case of push to the downside, because after the close of a weekly upward cycle, a new one is going to take place. So this is the situation for the next week. And for midterm, we have to carefully monitor the lower swing and the upper swing to better understand from a cycle perspective what the future might be on our Dow Jones index. Hope this analysis has given you a lot of insights. I know it's a little bit technical, so that's why, like said before, I recommend you to have a look at the introduction to the T-cycle analysis. As a methodology that is different compared to the technical analysis. It's quite technical, I've realized it. I took several years to understand how it works, but once you learn it, it can give you great advantages because you have control of time. So thanks for watching, and see you to the next episode.